Hello, everyone. Welcome back to this Days Zen with Saj podcast. It is I, your host, Sajeedahdahliah. Joining me today is the Halal Investing Mom, a successful business owner, a dedicated mother, and a passionate advocate for financial literacy. Through her platform, she shares her personal journey of halal investing and empowers people of all ages to take control of their finances in a way that aligns with their values. From budgeting tips to investment strategies, she's helping to break down the complex financial concepts and make them accessible to everyone. I'm so excited to have her on the show today to talk about faith, finance, and building generational wealth the halal way. Thank you so much for making it.
Assalamu alaikum. Hello, everyone. How are you? I'm so happy to be here to vibe and rock with all the Gen Zs.
Before we start, can you give the listeners some insights to what halal investing is?
Okay, so halal investing is you creating wealth, but you're very faith conscious. So as Muslims, there are certain requirements that the Sharia expects of us. A lot of people just think because riba is mentioned, which is interest. Everybody knows that Muslims are not supposed to partake in anything that generates interest or where interest is involved. So they think that Muslims cannot create wealth. They cannot invest and earn from such investments. Essentially, that is what halal investing means. It just means you investing in a way that is permissible, that is Sharia compliant and permissible as far as Islam is concerned.
If you're investing into something, if it doesn't require interest, then is it Sharia compliant or there are other factors?
Well, it's not just interest per se. In Islamic finance, there are certain things that should be considered when you're investing. Even the type of business in itself has to be halal. So for instance, you could find a software company. On the surface level, it looks halal, right?
Yes.
But when you look deeper into such a company, it's very possible that the company provides business solutions, IT solutions to a gambling company, So gambling in itself is considered not to be halal. So if a company partakes in something like that, it's a no-brainer that the income that would come from that part of the business will also not be pure. It won't be. So that's why. So you have to look at the type of business that the company is engaging in. That is also a factor. Then also riba, which is interest. Then we have gara, which is speculation and things like that. So even the Sharia does not encourage people to invest in things that are so uncertain.
Yeah.
Speculation and all whatnot.
Like Ponzi schemes.
Yes, stuff like things like for Ponzi schemes, in as much as there's no tangible assets, they do tell you yes, but it's a lot of speculation. You could say that.
Okay. Tell us about your story on how you became more financially knowledgeable.
So the way mine was really not at first. It wasn't really that I sought out. But all I know is that all my life, business is something that was always appealing to me, even when I was little, as far back as when I was in primary school. Whenever I had money, always I would want to grow that money, turn it from 1 naira to 2 naira. So that's kind of how it started. And when I turned 18, my mother gave me a book, Rich Dad, Poor Dad by Robert Kiyosaki. And I believe that was like the turning point for me. After reading that book, my mind kind of opened to other possibilities and options out there that I could invest in. So stocks became like my new love at that time. And I remember clearly whenever...
And this was around which year, sorry?
That was around 2004, I think.
Wow.
Yeah, that was around 2004, 2005, around that time. Because I knew I was just starting out, but now it's university and all. Yeah, in fact, I was like 17, not yet 18. So that was around 2004. So at that time, whenever I had money, and which was during Eid, when they give you Barka the Salah and all whatnot, I would gather all my money. And then in 2006, there were a lot of IPOs that were going on, 2005, 2006. I would gather all my money, maybe like 5,000 something, 4,000 something, 6,000 something, and then I would buy into the stocks that were being sold then. So IPO means initial public offer. At that time, a lot of these stocks that I'm mentioning were actually coming into the market. So I would take advantage of that. I'll go to the bank because usually then you buy from the bank or through your broker. But I used to buy from the bank. I'll go directly, I'll fill the forms and I'll make the payment. It was after that I think I even opened a brokerage account with an asset management firm. But at that time, that was how I started. That was how it was for me. So from then on, the love for knowledge now started. From reading that one book, it was now reading other books. And then while I was an undergraduate in university, whenever there was an elective, because I read law, so whenever there was an elective in the business side of our campus, I would always want to take such electives. Law encompasses or oversees almost every aspect of life. So there's capital market law and practice, and that was like a course that I also did, banking law, all on that. They were all courses. So I took all that. So from then on, then it was more and more of seeking knowledge. Because when I started, I didn't know that there were certain things that were not permissible. So it was just like I started investing in a conventional kind of way. Yeah. During that IPO, a lot of those stocks were banking stocks. Oceanic Bank then, and all of it. So that was how I started. But then as the years passed by, with me even doing law and taking some Sharia courses, I now started understanding that, okay, we are held to a higher purpose as Muslims. Certain things that you have to be sure to look out for. In a nutshell, that is how my journey started.
So you started around 17, 18. And at that time, were other people around you, your peers, also getting into investments, or you just felt like it was just only you at the time?
Honestly, at that time, it was just me. There wasn't really anybody I could vibe with about it. Neither did I have a mentor per se, but I don't know. My mom gave me that book, so there was probably the reason why.
Yeah.
And all, but she's not a financial person, so I couldn't really go back and tell her, okay, this is it, this is what I've read, and then she would advise me. Unlike now that when I recommend something to somebody, either a client or a mentee of mine, we can always go back and forth and vibe, and they can come back to me. And also for me, I would say it was kind of like a lonely journey, yes.
Okay. What do you think is the main issue young people face with managing their finances?
Young people.
Young people like me.
I understand. So I'm a millennial. Don't think I'm that old. But then again, I've been investing for over 20 years. So more than half of my life, I have been investing. For young people, I think maybe what is peculiar with your generation is the fact that something we didn't face during our own time, social media pressure. So the kind of pressure probably we faced was peer pressure. Then again, here you're faced with peer pressure, and then you have social media pressure added.
Fake life.
Yes. So a lot of people cannot tell between what is real and what is fake. You see someone doing something online, you don't know the half of it, you don't know the background of it, and then you believe it, and then you're influenced by it. You want to be like that person, or you want to be better than that person, So unhealthy influence and whatnot. So I think young people are really facing that now. For young people to be able to see beyond that, I think it's a challenge for some people. Also, I think young people, some of them or a lot of them, are being faced with a lack of financial education. So the thing is, if you remember from my story, it started with financial education for me. It wasn't a formal setting. It was more of personal effort on my own path, right? But now, I think your generation has it a bit better than us. There's so much information out there. It's easy to get information. It's up to you if you're seeking it. During my time, a lot of things, if you wanted to learn, you had to go to the library to learn it. Because when the internet did come out here in Nigeria, it still had to be those that could afford it and all. It wasn't like everybody had it at their fingertips. You either had to have a computer with internet access, or you had to go pay for it somewhere. But now you have smartphones. Now you can even invest from your phones, So for those who have closed up their ears and are not learning what is going on around them, that lack of education is something that they would face when it comes to their finances, because money is not something that is taught in school. It wasn't taught in school during my time, and I think it's still not being taught in school.
It's not.
They may teach you how to make money, but nobody's really teaching you how to manage, how to keep your money, or how to grow your money, except you're very conscious of making that effort yourself. And then also, I think young people face the issues of setting financial goals, because setting a goal is very important. If you have a vision or you have something you would want to achieve, even if it's not very clear, once you have identified that goal, in some instances or in some cases, once you write that goal, then what is left for you is to draw a roadmap, which is like a guide to how you can achieve that goal. So for finances, it's also the same. Even in a negative way, something like debt, if you're owing money and you have a plan how you're going to repay that loan, it saves you a lot of time and a lot of headache, unlike someone who just doesn't have a plan, but maybe even has an intention, or it doesn't even have that intention. So goal setting is equally as important. Another thing I think young people would face now is delaying gratification, which is really, really important. The fact that you let go of something now, not that you're not going to get it, it's just that you're going to delay it for a little bit of time. For instance, as a young person, if you start taking your finances very serious at a very early age, trust me, by the time you get to your 30s, you'll be balling. You'll be balling because you made all the right decisions. You decided to wait it out till you reap the benefits of whatever it is that you're going to recoup or earn. So delaying gratification in itself is a blessing for those who are able to do so. So I think maybe these are some and some other reasons, but maybe these ones are like the main challenges being faced by young people these days.
I think when it comes to delaying gratification, people have this mindset of YOLO, you only live once. Because when you tell people that if you work hard now, you enjoy later, they think in extremes. It's like, if you say, if I work hard now, enjoy later, does that mean there's no enjoyment now? But then I feel if you're able to plan some things, you'll be able to also enjoy at the same time working hard.
Yeah, definitely. That is an aspect. And then also, you would have to make some sacrifices in life. I don't think there's anybody who would not be faced with sacrifices. On a normal day, when you have wants, you would have to, and then you scarce resources, you would have to definitely do a scale of preference. Which one is more important? Because that's the best way to approach scarce resources. In life, in one way or the other, there are times when you would have to make sacrifices. So delaying gratification is still at the end of it's towards delayed gratification. It doesn't mean you will not enjoy it. It just means that it will be delayed. Yes, and delay is relative. It doesn't mean the delay is in 100 years. It doesn't mean the delay is in 20 years.
Well, financial management seems like drastic change if you're someone who has lived their whole life with the mindset of money in, money out. What steps can someone take as a beginner to make better financial choices?
Okay, it's a good question. I think this answer will relate to what we just spoke about, delayed gratification, for those who really want to YOLO now.
Yeah.
And I think one of the advice would be that budgeting, they should budget. People underestimate a budget. And some people feel a budget is just something that would restrict them from enjoying their money. But really, it's the other way around. A budget is just simply is a plan for your money. It is you telling your money where you want your money to go. Because money will go. It will go. And if you don't tell it where it should, it will go where it wants to go. Yeah. So isn't it better for you to tell your money where you want your money to go? And you do that by budgeting. So one of the easy ways you can do that is you just look at your lifestyle, more or less. You write down on a sheet of paper every single thing you spend money on. It could be on a daily basis, on a weekly basis, or on a monthly basis. Then you also look at what your income is. Either your income, your pocket money, wherever you want to call it. So your budget will now allocate from your income or from your pocket money to those things that you have written down. And for you, I understand that for you to keep to a budget, it has to be a budget that is very realistic. Yeah. So you should also bear that in mind. In fact, when I encourage people or when I teach budgeting, I always tell people that you have to have an enjoyment budget, because the things that give you joy in life, you're not supposed to just do without them or sacrifice them. Provide for them, but be reasonable. For instance, if you're someone that really loves to eat out, I don't think it is realistic that you eat out every day, because by the time you sit down and write out how much you spend eating out every day, you would see that it's an astronomical amount of money.
Yeah.
It's probably even more than the money you save and invest on a monthly basis. So what is reasonable? Is 2 times a week reasonable? Provide for that. If you are the kind of, you're a girly girl, you love to do your hair, you love to pamper yourself, go do your nails, maybe do your henna and all whatnot. Find a way to provide for it in your budget so that your budget is a budget that is workable. It's not a stringent budget and it's a very doable budget. So budgeting is something that I would tell for money management. Try and have a budget, not just that. Try and stick to the budget.
Yeah.
Try and work with the budget. And then the budget does not have to be static. As your income improves, you can also equally adjust to your budget. So I have started talking about budget, but I did not talk about investments, right?
Mm.
So please, your budget, so no matter how little, should provide for you. You can't spend everything that you earn. It's not realistic.
Yeah.
Nobody does that. Even Nigeria as a country, when Nigeria makes money, Nigeria saves some in foreign currency and things like that. Nigeria doesn't spend anything. Rather than Nigeria will even go and borrow money. It's not that Nigeria does not have money.
Yeah.
But that's just to tell you that nobody can exist just like that. If anything happens to you, if any emergency comes your way, you don't have shishi. That is not.
Yeah, because I genuinely think it's very risky and damaging finishing the money you have and waiting for more money to come. Then you finish that one, then wait again for it to come.
Or doing, in Hausa we call it doing small Maria, just to get people to give you money, to dash you money. And all. Sometimes it can be belittling, or you don't really want to be known as that person that goes around borrowing people money from people, and things like that. So just be financially responsible. When you have money and this is the money you have for a certain duration, manage it, budget for it. Yeah. It will go a long way. So budgeting is very important. Another way young people can manage money is through saving. If you save, there's something called an emergency savings, which is very important. If you inculcate the habits of saving and investing from a really young age, as you grow and the more money you make, you're not confused in how to spend that money or how to manage that money because you have already learned it. You have practiced it, and to a great extent, you have now inculcated it in yourself. Your emergency savings is something that would save you on a rainy day. And believe me, the rain will fall. It is as sure as the sun will shine outside. It's the same with an emergency happening to you in one way or the other. For me, when it comes to savings, I still tell people, even if you're going to save in something that is low risk, something that you can easily get your money out. But then again, I'm not really an advocate for just saving money and leaving money idle in a bank account without it growing. But if you must, we now have Mudaraba savings accounts. Profit they pay is little, but then again, it's better than just leaving your money in a conventional bank or under your pillow. And then also with financial management, you cannot ignore investments. That is why you now have a lot of Ponzi schemes running around, because it goes to show you that the human nature always has that desire to grow money.
Yeah.
Not knowing how to do it is a different issue. That's why some people will fall for all these get quick schemes and all whatnot. But then again, you went to school, you got a degree, you want to get a job, and one of the reasons is because you want to make money. And then also, you would want to be promoted, you want to grow in whatever it is so that you keep getting paid more and more money, right? So investing is something that you cannot ignore. There's just so much you can save. Like if you're saving 5,000 naira from January to December, at the end of December, the money is 60k.
Yeah.
It will not be more than that 60 because that is what you see. There's just so much you can save. But with investing, there is no limit to the amount of money that you can make because your money will grow. So there's something called inflation. So inflation basically is just the price of goods and services, like in a country and all. So if people keep hearing inflation is this and is that. So the thing is, inflation is a bad thing because it steals from you. Inflation reduces the value of your money. So a simple example I would give you is if you want to buy a television, right? And then you go to the showroom in January and you're like, okay, I want a 30-inch television. And they tell you, oh, it is 200,000. And you're like, oh, 200,000. Okay, let me save 50K. I will save in 4 months. So you go back in April, right?
Yeah.
And then they tell you that this television set is now 230,000 or 250,000. It means 200,000 has reduced in value. 200,000 can no longer buy that television.
Yeah.
So the price of the good has what? Increased. Which means you now have to go and look for 30K or 50K, depending on what they tell you the price is, to go back and buy that. But if you invested your money in January, right? There were certain stocks that was selling at a particular price in January. And then by April, that stock had gone up. What have you? Your money has fought inflation. Your money has beat inflation. Why? Because we invested the money. You did not save it and just leave it idle like that. So investing is something that you cannot ignore. And if you're considering financial management as a young person, you need to consider investing your money, no matter how little it is.
A lot of people are afraid of risk, which is why they tend to shy away from investing their money. But is there anything you can say to motivate people to want to invest more?
So the thing is, there is nothing in life that does not have risk. Even in investing, there is no investment without risk. But what do? Approaching it from a calculated risk point of view, right? So I don't know if you've heard of the Ponzi scheme that crashed recently, which is CBEX.
Yeah.
Very risky. How do you put your money in something that they tell you they will double your money? They tell you they would invest it in Forex. They will do this, they will do that. Forex in itself is an investment that is very volatile. If you've not spent time studying Forex and all whatnot, why would you even want to go there? Because you can lose it all. And then some people are so comfortable with giving money to people to invest on their behalf. When you have that option of learning the basics yourself and understanding, okay, because no two investors are the same.
Yeah.
Your situation is different. Your appetite is different. Some people are risk takers and some are not. You're not a risk taker, and then you go and put your money in something that is so uncertain or very risky, and then when you lose your money, you cannot sleep. And then there are people who are good at taking risk, that when they lose money, they are fine. They just forget about it and they move on. And someone cannot forget. The person will just keep lingering in their heart. They are depressed, they are whatnot. You see, you're different from somebody who is a risk taker and finds it easier to move on. The point I made about inflation in itself is one of the things that should guide why you are investing. You are investing because you want to preserve the value of your money. You want it to be that the money you are keeping now, that you think you will need in the next 5 or 10 years, when that time comes, that money is still able to do what you are keeping it for. So rather than save it and then be faced with inflation in 10 years' time, that is one of the reasons why you want to grow it. As inflation is going up, your money too is increasing in value. So that when that time comes that you need that money is not valueless. That money has retained or even surpassed its value. So that is one of the reasons why, or one of the things I would tell somebody who says, oh, okay, they are averse to risk, they are afraid of risk and all. No, you really cannot be, because life in itself is risky. If you wake up in the morning, you dress up, and then you decide to walk to wherever you're going to, that's a risk you're taking.
Yeah.
You may not make it back.
There's no guarantee.
Yes, in life, everything is risky. There was someone who said he's so scared of entering a plane because planes crash and all whatnot. And unfortunately for him, he was in his house and a plane crashed on top of his building. Wow. So he never entered a plane, but then a plane killed him at the end of the day. So life in itself is risk. So the only thing is take calculated risk, but you really cannot avoid risk.
We can't avoid risk. So what is one piece of advice you would give to someone trying to attain financial freedom at a certain age?
At a certain age?
Yeah.
So will this age be your age or someone?
No, let's say somebody that's 16 now and has gotten into investing and saving and budgeting, and they want to attain financial freedom by the time they're 25 or 30. Around that age.
Beautiful. My one advice would be just start early. Time is your best friend when it comes to investing. When you start investing early, by the time you get to, let's For instance, let's even say the person is 18 and you start investing at 18 and you're very consistent at investing. In your 20s, early 20s, maybe 23, 24, or 22, you start a job and then you increase the way you invest because now
your income.
By the time you get to age 30, somebody that is starting at age 30 would have to play catch up with you. Remember, as a starter, maybe what you were earning wasn't that much. And then you get to your 30s and your income has increased. The person would have to do like maybe times 3 of what you're investing at age 30
to get to where you are.
To get to where you are. So time.
Wow.
If you start investing very early and you're consistent and you know what you're doing in investing, trust me, in your 30s, it will be very difficult for you not to own your own house or own your own, no matter how little it is, because you made really good financial decisions when you were younger. You can retire early and you can gain what is even called financial independence, which is your investments have grown to a level that they can fund your lifestyle. You need not work actively. It is rather your investments that will be working for you, because you never really attained financial freedom until you have money that is working for you even while you sleep. And before you even attain that, if you start investing, that's just what investing is. You are sleeping and money is
growing for you.
Now that you're in school and you invest, it means that you haven't even started earning your own money, but already you have money that is working for you. So that is like the most important advice I would give. Start early because time is your best friend when it comes to investing.
There was a conversation I had with my mother some weeks back, and my mother and my sister. My sister was like, she's using a lot of her money, she's investing a lot of her money. Then I was like, one of the only reasons why I'm able to invest now is because I'm so fortunate that I don't spend a lot of money on the daily. Everything's provided for me. Privilege is also a factor for being able to invest from a young age.
No, privilege is a factor, I agree with you. But then again, your generation, in as much as I spoke about the things that your generation faces, there's also something else, a positive with your own generation. In my generation, when you wanted to earn side money, you were doing things like babysit, they pay you, or you work in somebody's shop, or they pay you, maybe your family's office or something like that, or you wash the car, or things like that, menial things. But your generation now, you find children as young as 12, 13 having skills that are well paid for.
Yeah.
Do you understand? So your generation has that. Your generation can start earning good money even before they are done with school. My generation, maybe you teach children extra lesson and know how much would they pay you. But your generation has the good, in the sense that there are so many people who are under the age of 20. They haven't started working and they are earning good money. So that even gives them the leverage to invest, bigger amounts of money or bigger sums of money, unlike people that were at that age in my own generation.
Yeah.
So I would give that to this generation. Skills. You don't have to have a degree. All you need are skills. Skills are what would earn you an income. Even now, even before you're done with school, and in fact, some people are earning more from their skills than they are from their degrees.
Yeah.
Even after they graduate from school, some of them it's just the skills they have learned. That is what they would use, to earn their livelihood.
If you could go back in time, is there anything you would change about the way you handle things financially? I want to hear the very funny stories of back then, the wrong choices you've made.
Well, for me, if I could go back in time, I would probably say I should have invested more. Knowing what I know now, and seeing the way the market is now, if I had known this stock will be like this, and I'll be like, God, when I entered that IPO, why didn't I buy more than that? Because when I started my journey, there were years of stagnation in the sense that I wasn't consistent. There were years whereby maybe in the whole year, I would have invested maybe just 3 times, 4 times and all. But now, knowing what I know now, investing is now part of me. It's something I do every month. Once my income comes in, before I start spending, this is what is moving to my investments and all whatnot. So when I look back, I'm like, okay. And then another thing is, like I told you earlier, I didn't have a mentor. We didn't have, I think the only social media presence we had then was, we had the high five, you know it.
I don't know that.
We had the Facebook. And even when Facebook started initially, for those years in the beginning. It was more of a connection kind of platform. So it was just you interconnect with friends and all. It was now much later that business,
news,
education, like people started teaching, So for me, I didn't have a mentor. I didn't have anybody to guide me, to hold my hand and all. I wish I had that when I look back, because it would have saved me a lot of trouble. So with my sisters, is one of the reasons why I have tried to hammer on them that I started early, but I didn't have a mentor. I didn't have somebody to hold my hand. So I've always tried to make them understand that you're this young, take it very serious. Take it very serious because you can do wonderful things if you're consistent. So it's not just to invest, but be consistent. If you start early, also stay consistent. No matter how little. Don't be like, okay, no, this month I don't have so much, so I'll wait. No, that's small that you have. That not so much, put it. That not so much, put it. That is how you fill a bucket. With tiny drops, you can't fill a bucket. So you do that. One of my sisters is a doctor, and housemanship year, or what would you call it? I know she saved more than 50% of what she earned. And in the year, she was able to, she invested in gold. So even while she was saving, she wasn't just saving in a bank account. Rather, she was saving in a fixed income, a halal fixed income account. So it earned what it would earn. And then at the end of the duration of her service year, she took the money out. She bought gold. She bought gold in, I think, February or so. And now, currently, the value has increased by close to 15%.
Wow.
Yeah, so you can see the power.
So gold is also a very good investment.
Gold is the oldest storage of value. It has been existing since the beginning of time. So you already know it is safe. You already know that gold is not going anywhere. Even countries save some of their money in gold.
Wow.
Countries of the world.
Wow.
Yes, they save some of their money in gold. And then there are many ways to save in gold. Unlike before that, it had to be like the physical. There are many ways. You could do the physical, you could do the ETFs, you could do... So ETFs is just exchange traded funds. They're kind of like a collection of certain things. You could find an ETF that is investing in gold and you can invest in it. So when you invest in that fund, you have invested in the gold that the fund puts the money in. And then when it appreciates, you earn from that. If it's paying a dividend, maybe when they trade it, you also earn from that. And then gold is a very Sharia compliant investment instrument or asset.
Yeah.
So I think for me, that would just have been it. Maybe I should have done more, and then I wish I had a mentor. So if you have somebody who is available or guiding you, I think it goes a long way. It avoids you get to avoid so many. I made so many mistakes along the way. I learned also along the way. But alhamdulillah, that's how my journey was supposed to be. And also for others, I guess you could do better.
I have this very, very funny story when I started investing. So I started investing I won't even call it investing, but I started building my portfolio when I turned 18. And I signed up with Bamboo, the app.
Bamboo, okay, to buy stock.
I bought some very weird stocks, like the cheapest ones I could find. And one of them was Global Star. Okay. It's a satellite company. And at that time, they were selling one stock for $1 or less. I bought a few shares. Then... after a year after some months, I didn't have money. I sold all my shares for Globestar. This year, some months back, I saw the stock. I saved it to my wait list, so I saw it there. I was like, I know the stock. At that time when I saw it, it was $19.
Wow.
I was like, I know the stock. I went to my email, typed Globestar. I now saw the email they sent me when I sold my stock. I missed out on gaining $18 per share, and I had more than one share.
So that is like 1,800% return on investment.
Yes. And I lost it all because I wasn't patient.
No, well, the thing is, with investing, you need to look at it long haul.
But that was 3 years. It grew in 3 years.
Yes, that's what I'm saying. There are people, I've held stocks for... There are stocks I've held for 15 years. You look at the long haul. And then another thing is because you did not have an emergency savings. That was why you were broke. And then you decided to go and terminate an existing investment that you had not even waited to earn from.
Yeah.
You understand? So that's why emergency funds are very important, so that when you have an emergency, you're not thinking of, okay, which of my investments am I going to sell? If the opportunity presents itself for you to buy, let's say, real estate, that's not an emergency. That is another investment option. Why? Because sometimes you do an investment so that you'll be able to key into another investment.
Yeah.
Do you understand? So if you were selling those stocks at that point in time to key into another investment opportunity, that is fine. But you were selling it just to attend to a financial need that you had at that point in time. And then you see how unwise such a decision is. If you're investing in stocks, you're supposed to look at certain things. Look at the management of that company. Look at the kind of product the company is into. Look at also the financial standing. Then you also look at what is happening around that time. If those things, everything is solid, why won't you stay invested in a stock? You would earn from that stock. You understand? You will earn from that. So it's for you to stay the long haul. Play the long haul game. Even that emergency that you sold your stocks for, I'm sure if you had probably asked your parents for that money, how much did you earn? Maybe that money would have come. It may not have been everything you wanted, but it would have come. So yes, so sometimes you see, you play the long haul game. You can make money from stocks in short term. But then again, are you a trader? You're not a trader. You're an investor. You're investing. So why would you just want to be off? If you hold a stock for a couple of years and you notice it's not doing well, but like I said, if you had done your due diligence before buying that stock, the odds would really be very slim that the stock will not perform as you thought. But then again, if it happens, then you can rebalance. It's not to sell off and spend the money like you did, but it's to sell off and buy something else that is doing better. Yeah.
The painful thing was I actually did research about that stock, because the time that I bought the stock, they were working with Apple. They work with Global Star, they work with Apple. So the main problem was just the fact that I didn't know my goal for investing. Like, I didn't have what was making me invest my money. I just wanted. There was another stock I once sold. I think Cowrywise. I can't remember what it was. But I used Cowrywise at some point. I sold the stock because I saw it wasn't.
Cowrywise
wasn't stocks, right? It was.
They sell mutual funds.
Yes, one of them. I ended up selling it because at that time when I started, I didn't really have a clear goal of what I wanted to get out of investing. And I wasn't very patient. Every day I'll check, I was expecting it to grow really quickly. And that was very wrong of me. Until last year, I don't know what changed for me. I started seeing a lot of financial content on my social media. And also social media has as you said, it has a very big effect on how you see finances. So at that time, I started seeing a lot of financial content. There's a particular girl around my age, but she's a bit older, like 23, 24. And she's trying to attain financial freedom at a certain age. And she has a job. She invests a lot of her money, and her money has grown so much compared to when she started. And it really motivated me. And I was like, wow. And also I came across your page and lots of your content, plus reading about inflation from you and so many things. And I was like, okay, I'm going to start taking this thing very seriously. Then I started investing every month, even the months that I don't have certainty that I'm going to have money to invest. The month prior to that, I keep money so that when the next month comes, I have money set for my investment. So I had to beat that mindset of expecting my money to grow overnight and set my mind to...
If you're lucky to enter into a certain investment, you can make money from it. Like last year in January, I think Dangote stocks sold for 300 and something in January. And by February, just a month, it had risen to 600 plus. So there are times, but then again, you cannot time the market. So just be in the market, but since you can't time it. So for someone that buys Dangote stock every month, will they have missed out on that?
No, they have.
So you see, that's the beauty of consistency. If you're consistent, you would earn and you would gain from whatever the market fluctuates towards.
Yeah.
So
thank you so much, Halal Investing Mom, for taking time out of your busy schedule to share your knowledge with us. We really appreciate you. Thank you so much. If you guys have more questions, you can find her on Instagram at the Halal Investing Mom. She holds classes, and I think you have one coming up.
Yes, I do. I have my beginners class to investing coming up. It's called My Halal personal finance class. 4.0. So this will be like the fourth time that I'm holding this class. So it's kind of like a course, but it's a live one. It takes place on Telegram 2 days. So the one coming up, it will be on the 16th and on the 23rd of May. So it is day 1, day 2. I do it 2 days because, like I said, it is a live interactive class on Telegram whereby as I teach, you ask questions and all whatnot. And then also the replay is available like a year or so. The group would exist. So even when you start your journey, you can always come in, share your testimonies with us. Or if you have questions, you could drop it in the group like that and we answer. So it's kind of like, I try to make it an all-encompassing course whereby we're talking about savings, we're talking about investments, the different types of investments. So in investing, there's something called diversification, and it means that you spread your risk. You had questions on risk.
Yeah.
So if you're investing, you diversify. You put your money in stocks, you put your money in mutual funds, you put your money in ETFs, REITs, commodities. There's just so much that you can put your money towards and it will grow. And the beauty of it, or the wisdom behind it, is that if at any certain time a certain industry doesn't do well or a sector, this one will do well. So at the end of the day, every year your portfolio is growing.
Yes.
Your portfolio is growing because certain things in the portfolio are doing well. And if you're lucky that all the sectors did wonderfully well that year, then you can just imagine how well your portfolio would have grown. So your portfolio is your collection of everything you own. That is your portfolio. So the class, like I said, is taking place on the 16th and on the 23rd of May, inshallah. And the fee is 10,750. So that's the fee for both days that the class will hold, God willing.
One last question before we wrap this up. Is halal investing limited to only Muslims?
No, it's not just limited to only Muslims. As long as you're someone who's very interested in things that are ethical, right? Then halal investing is for you. But for us Muslims, the word ethical is not enough. It also has to be halal, not just ethical.
Clean,
right?
yeah.
Not just ethical. But if you're someone who is a lover of all things ethical, then halal investing is for you, because halal is like another level above ethical. Yes. And what I know is, or what I've come to know is, whatever you leave for Allah's sake, you always see Allah's barakah in it. From my own experience, all the things that I have invested in, and I have been very conscious that this is halal, I haven't made a loss from investing in them.
Yeah.
So that's just the beauty of Islam for you. If you stay true to your faith, you always see the reward that comes from it.
Yeah. Okay. That's very lovely. That's a very lovely insight. Thank you very much. Thank you guys for listening to this episode. Don't forget to leave a review on Apple Podcasts, Spotify. If you have any questions, be sure to text at the Halal Investing Mom on Instagram, or you can text me at the Stays and with Saj podcast. My DMs are open. Her DMs are also open. I hope you guys have an amazing day. Bye.